Greetings, everyone, and welcome to another edition of Female Barber Talk with Yah-Tay. I am your host, Yah-Tay Keaton, also known as Yah-Tay, the barber stylist and barber educator now. Tonight is a very special episode. Not only is it Father's Day today, but we have a young man that's going to come on and bring you some information in reference to income and building wealth, protecting your assets, and creating a legacy. But first off, I want to say happy Father's Day to all the men, the uncles, everyone that's standing in the place of a father for a child or children. I want to give a shout out to all the fathers out there, and especially my father. You all know that I lost my father last year. So this is actually my second Father's Day without my dad. But nonetheless, I'm honoring him today, as well as all the men who are fathers who are stepping in and doing everything it takes to hold the family down and take care of everyone. So with that, welcome to episode number 78. It is entitled, let me remove this and put this up real quick. It is entitled, let's get this banner up there we go. It's entitled From Income to Impact, Building Wealth, Protecting Assets, and Creating Legacy with Mr. John Bowers. He's our special guest tonight. I'm prepared to do a little bit of intro of his bio, and then we're going to bring him on and get this segment going. A lot of information, I got to tell y'all. I've personally sat with him, and when I tell y'all, eye-opening, very informative, sharp young man, just the inspiration and motivation behind wanting to bring this information forward. And I was like, look, can you come on and share this with our audience, more specifically for our barbers and beauty industry professionals? So, but nonetheless, John Bowers. Today, our guest is John Bowers, founder of Architect Family Office, a holistic financial service firm dedicated to helping families, business owners, and professionals build, protect, and transfer wealth with purpose. Born and raised in Fairfax, South Carolina, John learned early the importance of faith, hard work, and community, values that continue to shape both his personal and professional life. Through Architect Family Office, he works alongside tax professionals, legal experts, wealth managers, and business advisors to help clients create customized financial strategies focused on retirement planning, asset protection, tax efficiency, risk management, and generational wealth. A relationship-driven leader, John is passionate about helping others reduce financial blind spots. Can I tell y'all? I'm gonna let him talk about these things. Let me get back. John is passionate about helping others reduce financial blind spots, protect what they've built, and create lasting legacies for future generations. For John, true wealth is about more than money. It's about purpose, impact, and leaving a legacy that outlives you. So please help me welcome Mr. John Bowers to Female Barber Talk with Yah-Tay. Welcome, John. How you doing today?
How you doing, Yah-Tay?
Thank you for taking time out of your busy day, because I know you're a busy man with this here.
Yes,
and just to share this information with us. We already got folks tuning in. Thank you, LaDosha, Peace Family. Thank you for joining. Greatly appreciate it. So, John, thank you once again. That introduction, I don't think it did us did justice to the wealth of knowledge, the experience that you have, what you're bringing forth. Yeah, I've had some time to sit and talk with you on numerous occasions, and you've just blown my mind with the information that you provided. And I'm like, wow, why don't we know this? And how come? You know how it is? Why this? Why that?
Yes,
So
ma'am.
thank you for taking this time to be on the podcast to share with us this very important information, especially in these times. We have to look at lowering our debt, maximizing our dollars, making our dollars work for us, not just now, but in the long run. You know, when we decide to, I won't say retire, because I think because I'm I'm in what I love to do. I don't know that I ever retire from it. I'll have my hands in it some kind of way, but nonetheless, just preparing for the other side of the workforce, you
Yes,
know. Um, so I'm excited. As you can see, I'm
yes,
very
ma'am.
excited about tonight's podcast entitled From Income to Impact: Building Wealth, Protecting Assets, and Creating Legacy. So you grew up in is it Fairfax? Did I pronounce it correctly?
Yeah, absolutely. You did. I grew up.
Okay, Fairfax, South Carolina.
Yes, ma'am.
How did your upbringing shape the values and perspective you bring to your work today?
Well, thanks for bringing me on, and I do appreciate it. Yes, it
No
actually
problem.
it propelled me to we had it. We didn't have it the best. We struggled. My mom. Well, I grew up with a single parent. My mom had
Uh-huh.
8 kids, and I'm the fourth oldest. So I'm
Wow.
between the oldest and the younger crowd. But
Uh-huh.
we made the best of it. I really
Uh-huh.
thank God for my mom. She's a praying woman, and she's always praying for us, and still today. And
Uh-huh.
so, but I always knew that something was. Why was it that some people had it kind of good and some people struggled? And
Right,
it
right.
was just the information. And so I started working 14 years of age. I got
Wow.
out there and started working, and God has been putting me in front of good people ever since on
Uh-huh.
on this journey of mine. And I came across back in 2001, I came across some people that brought me into the financial service industry, and
Uh-huh.
it just lit me on fire because I knew that this is what people needed to hear. The sad thing
Okay.
is, a lot of resources are not out there available for them.
That is so true. It's just from the information that you shared with me, I was like, I didn't know nothing about this. So our conversation, I got the double time it
Yes,
because
ma'am.
I'm a I'm a little I'm a little more seasoned. I'm gonna say that I'm a little more seasoned, a little bit more a little older. So not having the information that you've provided, I have to be a little more aggressive in
Yes,
order
ma'am.
to meet some of the goals that I envision for myself. Um, and when it come retirement age,
Yes.
according to the government,
Right.
but we're gonna get into all of that. So my next question for you, um, I know in our conversation you talked about a lot of different turning points and things of that nature. So what was the major turning point in your career um, that moved you into selling financial products to becoming a strategic advisor? What inspired that transition there?
Good question. What inspired it was I wanted to be not just a person that sells products, but I wanted
Uh-huh.
to solve problems. Because I realize a lot of times uh, you can have a problem and you can have a financial product and still not reach your financial goals. So I wanted to provide more value for the client because if I was on their end, I would want that as well. And I try to put myself in their shoes. And so I wanted to focus more on not just a policy, but a plan and strategic thinking. Because
Okay.
salesmen focus on products, Advisors focus on outcomes. Strategic advisors focus on helping coordinate the entire financial plan. And
Ooh,
so,
say that one more time. What you saying now?
yes, ma'am. I said, salesmen
Break
focus
that
on,
down again,
all right.
because
Yes, ma'am. So salesmen focus on products. Okay. Advisors focus on outcomes. Strategic advisors helps coordinate the entire financial plan. So what I like to encourage my clients, do you just want a product, a financial product, or do you want a financial house? And most people don't even know what that means because we've been sold products and a lot of people are product heavy, but none of
right.
it comes together. And so I wanted to be different. I wanted to separate myself from the noise. There's a lot of people in the financial service world. They're in insurance, they're financial advisors and so forth and so on. And that's great. But I wanted to have a distinction with what I do. And so
Okay.
I took more of the holistic because I believe I can provide more value for the client. And the more value I can provide, the better we can succeed financially on our end as well.
Okay. We got some comments. Ladosha says he's coming out the gate. Man, Ladosha, I'm telling you, when I sat down with John, I'm going to be transparent with y'all. So when John first approached me, I was like, everybody always trying to sell you something or get you involved in something. So in all honesty, it took a couple times. And then I was just like, you know what, John? I done had this person come at me about this. I done had this person come at me about this. What makes you different? And I'm gonna tell you, the wall came down and he took time to break things down and give me examples. And I'm like, you know what? If he's taking time out of his day to share this information when he can be out there talking with someone, helping his clients, providing this information, I was like, I need to listen up to this. I need to take heed. That was the first time. Then he said, you know what, Miss Yah-Tay? I'm going to do one better. I'm going to bring my laptop and I'm going to sit down and show you as if you were getting the product or, getting the service like right now. We were getting ready to get into it right now. And I'm like, okay. So that took another layer down. And I'm like, this guy's serious. This guy's serious. And after that consultation with him, I was like, you gotta share this. Can I help you with this? This is what I got. This is how I can help put this information out there. And like he said, repeat that again. Who sell what and advisors do what?
Yes. So salesmen focus on products. Financial advisors focus on outcomes. What I do is I focus on coordinate the entire financial life from A to Z.
Okay.
That makes me
And
different.
when he say A to Z, from the cradle to when you're retiring.
Yes,
And
ma'am.
he showed me different scenarios, for parents who are getting their children involved. I'm talking soon as they're born, and then an individual who's in their 20s to somebody, in their 30s and 40s, and even my age. It's never too late. I got to work a little more aggressively, but I see the light at the end of the light at the end of the tunnel.
Yes,
But nonetheless, I have one more question in this journey behind this success with you. Looking back on your journey, what experiences taught you the biggest lesson about resilience, growth, and serving others? You kind of touched on it a little bit, but I
oh, yeah.
want the people to know before we get into the meat and potatoes, so they know who's before them, they know your values, they know what you stand for, they know what you're all about.
Oh, yes, ma'am. So resilience. When I first came into this field, I had no financial background. I didn't grow up from a family of wealth building and things of that nature. So everything was out the mud. and it was very hard. I
Mhm.
think I stood in the industry for 6 long years. I had to keep a full-time job. I couldn't go like I want to. So I learned a lot, but it
Uh-huh.
was just challenging. I remember going through a season of just jobless, uh, homeless. I went through those spells, just not being able to cross over at all. I quit, come back, same thing. We try to. It's just been tough, man. This has been a hard journey for me,
Mhm.
but it wasn't until 2000 when COVID happened, 2020, is when I transitioned from captive to independent, and that's when we took off because now we had a lot more to offer the client. We were stepping in new territory, and we were
Mhm.
able to do it full time, nonstop. And so, 2022, we went LLC, JB brokerage firm, and then not too long after that, we added on another element so we can serve clients at a higher level with the family architect office. And
Okay.
so it's been a journey for sure. I learned a lot, but through it all, God has just been bringing me into different circles at the same time, exposing me to concepts that when I first got into the industry, I had no clue about. But as I continued to journey on and put me in different circles and different environments, I was exposed to different wealth strategies and different financial plays that the elite wealthy and the well-affluent families have been using for decades. And now I'm able to take that, add that to our arsenal, and still be able to provide it to our clients. So yeah.
Wow. Wow. The key takeaway that I want our audience, what I would like for our audience to take away from this first segment as we prepare to go into the second part of this: success is built through purpose, relationships, and continuous growth. You just heard John say that he worked full time. He wasn't able to jump into it fully. He's gone through a lot of personal challenges himself to come to this point. So his purpose has continuously driven him through those hard times to get him to this space where he's now sharing this information. In the relationships, he's talked about the various relationships that he's built, not only to offer what he initially started offering, but as he built relationships and got more exposure, that widened what he could offer to his clients. Hence, the architectural family office, which he's going to talk more about. And it's continuous growth. Even with what I do, it's continuous. It's
Yeah.
continuous growth, and continuing education, and staying on top of your game so that you can, like myself, offer the best to your clients and be current with the information and all those things that are out there for them. So as we prepare for segment number 2, why financial literacy matters, that's what we're getting into now. The financial challenges entrepreneurs face, because I am an entrepreneur. I got some other things going on, but the ink ain't dried on the paper yet, so
Yeah.
I'm not going to share that just yet. But John already knows about it because it's part of the financial plan. But nonetheless, um, I for my first question in this segment of why financial literacy matters, and I'm not as astute as I could be. However, um, as we were talking, even with the little bit that I know, you was like, "Oh, that's a good question. Oh, that's a good that's a good question." But nonetheless, what you bring is opening my horizon, is providing me with more insight, and also giving me the tools and instruments that I need to create what I envision for myself in the next 15 15 years.
Yes, ma'am.
you know but nonetheless, the first question I have for you: many entrepreneurs work hard and generate income, yet still struggle financially. Why do you think that happens?
Yeah, great question. A lot of entrepreneurs focus on making money and building wealth. In actuality, they're not the same. Entrepreneurships often focus on revenue instead of cash flow. And because of that, they lack tax planning, no succession or exit strategies,
Okay.
mixing personal and business financing, no asset protection, delaying retirement planning. And because of that, it's caused a lot of us to be in still a high paying job, basically.
Right.
Because if we take our hands off the steering wheel, a lot of times it goes down. What we like to do is help people understand one of the simple analogy. Michael Jordan, one of the greatest basketball players, right? But he
Yes.
would never win championships without a team.
Right.
So I encourage entrepreneurs to have a financial team, not just someone that's selling products, okay, but someone that can strategically sit down with you and customize, design, because everybody financials are different. So you
Yes.
want to kind of see what your objectives are, your long-term, short-term, and then provide the proper blueprint for you to build on.
Right.
Because there's a lot of moving parts, especially in the financial service industry. We was taught to work hard. Most entrepreneurs, they go get it out the mud, they go work, they grind, but eventually you're gonna get tired. And so you gotta have systems in place to protect and outperform your income, to
Hmm.
provide financial security. So, but that's what I believe. A lot of us struggle with those blind spots, basically.
That you hit that right on the head in terms of entrepreneurships and the two differences. Repeat that one more time, because I want our barbers in the back and our stylists in the back, our braiders and all of those. This information is evergreen and it can be used in any area, any profession, any individual can utilize this. But I asked John to come on to really talk to the industry that I'm in currently. Barbers, stylists, braiders, anybody in the barber and beauty industry, because oftentimes we don't have those things in place, because unless you're working for a company, like a franchise, and let me differentiate the two, because you got some where you're 1099 and you're still responsible for your taxes, your financial planning and all of those things. Whereas if you work with a company or a franchise that is W-2'd, then you have, certain things in place that you can put aside some savings. But even with that, we were talking about some things, and I was like, I don't know if I want to do that one again, because when I needed to get to my resources, I couldn't. I had to jump through 30 hoops to get, to
Yeah.
get to it. And I'm like, I don't want to do that no more.
Yeah.
But be that as it may, um, share the difference between the entrepreneur. Repeat what you just said about tax planning and hustling and all of those things.
Yes, absolutely. So once again, entrepreneurs often focus on revenue instead of cash flow.
Thank you.
They focus more on, the grind, the chair, making sure they have enough clients. But if something were to ever happen to them, would your cash flow replace your income? And that's a big topic. Number one, tax planning, because we all know as business owners or 1099 or gig workers, the more money you make, the more taxes you got to pay. So it's important to have a proactive tax team, not just filing your tax at the end of the year like the CPA or accountant, but you want to have proactive tax planning, not reactive, but proactive, to be able to help you save money year round versus you having to wait to be reactive when you file your taxes. Also, succession or exit strategy. So, for an example, you got to ask yourself, okay, I'm in my accumulation stage now, but what is my strategy to exit the business or exit the workplace and I'm still be able to sustain financially, not take a step back, but to still be moving forward. So you want to have either succession plan or exit strategy. And that can be either selling your business or scaling the business or completely exiting, whatever. But you definitely would like to have a team to help you manage that or decide what you want to do with that. Business and personal planning, business planning, you want to kind of keep that separate so you don't cause any audits or whatever. Then you want to do your you want to have a plan for retirement, of course.
Mm-hmm.
And one of the things I've learned just on my journey is that a lot of business owners have created a job for themselves. It's basically still self-employed. It's a business, but they create a high-paying job and not really focus on wealth building machines.
Gotcha.
Not having systems in place, because systems will outperform us any day, all day. And
Right.
we need to have a system in place that regardless of whatever happened in the business, that system is still going to generate income with or without me. So that's some of the things that we do. And one of the key messages I like to talk to my barbers and beauticians is your chair is your income source, but your investments create freedom. Your investments create
Ooh.
freedom. So,
Your chair is your income source, but your investments create freedom. LaDosha says, thank you for this. LaDosha, I'm telling you, when he sat down with me for almost 3 hours, I was like, John, can I show you something? And I was like, I got this, and this. I help you get the word out. Can you please come on? But yeah. Thank you. She said, thank you for this. No, I thank John for sharing this information. With that, I want to go into our second question in this segment of why financial literacy matters. What are some of the most common financial mistakes you see business owners, barbers, stylists, and beauty professionals make? You kind of touched on that in the last question, but share with us, what are some of the financial mistakes you see business owners, barbers, stylists, and other beauty professionals make?
all right. Some of the mistakes is a lot of them don't have emergency funds.
Okay.
Or a lot of them that I've talked to or helped out, they don't have proper insurance, proper life insurance. And when I talk about life insurance, I'm not talking about just something to put you in the ground, because that's funeral home insurance. Because after the funeral home insurance get that money, the family ain't got nothing else. And and that has a market, but we're talking about something different, Yah-Tay. And just to kind of keep it real, I want to let people know this, that if you do it right the first time, you never have to worry about repeating it again. I'll give you an example.
Mm.
Most of the affluent or ultra wealthy people, they didn't get there by mistake. They got there through strategic planning. Let me break it down. What they'll do is, some people, they'll put $1 million, $2 million, $3 million on each other. They know they're gonna pass away, and the goal is to create an inheritance that they can take that $2 or $3 million policy, put it into an account, draw from the interest of it, so they can live, off the interest of that principal. And when the principal doubles, let's say $1 million doubles to 2 million, 2 million doubles to 4 million, 4 million doubles to 8 million, they're self-insured. And as the principal doubles, the income doubles to what they're living on.
Right.
So I encourage my clients, you think about it. How many times, Yah-Tay, have we seen people either in our family passed away or around us, and they never passed down any inheritance? Just
Yeah.
enough to put you in the ground. That's it. Because that's all we was taught, or that was all that was presented to us.
Right.
But this is how it really is. If you do it right the way I'm talking about, you never have to worry about insurance again, because now you become self-insured.
Right.
Instead of always being in a cycle of having to purchase insurance. They don't see. So that's what I'm saying. So when you have the right insurance, if anything were to happen to you, your income passes away with you, But if we put plans in place to properly protect your income, even if you're gone, your income still comes in because your family still have to live. So the proper income protection, this proper insurance, and really just being informed
Right.
on what that looks like. And stop being not being underinsured, but being properly insured. So that is that's a foundational thing as well. Of course, retirement accounts.
Mm-hmm.
Most people are in tax deferred products like your 401ks and your IRAs, but they are tax heavy. They're
Mm-hmm.
subject to market loss.
Mm-hmm.
And so a lot of our clients, as you and I talked about, they like
Mm-hmm.
more of the ability to not participate in taxes, even though those taxes are going up. They can stay tax advantaged, tax free. They
Right.
have liquidity and they can access money without triggering penalties. So certain accounts that we offer can definitely help with that. So our goal is to either mitigate or eliminate.
Mm-hmm.
Okay,
Wow.
and most of a lot of the barbers and beauticians or foundations a tax strategy. Of course, that's very important because you want to keep your money. You want to keep as much of it because we go out there, we work hard, and
Mm-hmm.
give all of it away. But here's what I learned, Yah-Tay, is that the IRS rewards structure and they reward strategy and they penalize you if you don't have it. And most of us don't have the blueprints. Most of us don't have the playbook, if I can say that word,
Right.
to help structure and strategize to minimize as much as possible. So now you can take what you've earned and put it towards your future and
Mm-hmm.
different accounts to help you continue to build and perpetuate wealth. So it just a lot of, like I said, most people don't have those elements, and it's not our fault. It's just like I said, the resources are limited, and a lot of people don't have access to it. So that's why I'm very passionate about really empowering people, not selling them anything, because we've been sold stuff, but we want to empower you, okay, and inform you so you can have the best education, and now you can make the proper decisions for you and your family and your future because you deserve it because you work hard for it. So.
That's right.
Yeah,
See, y'all, when John was talking to me, not only did I feel more informed, I felt empowered, even in my, and I'm just going to be even more transparent with this. Many of y'all know, if you don't know, I'm 54. So, where someone was getting this information in their late teens, early, we're going to say 20, and they work this program and they're able to do certain things. Let me back up. I come from my household. First off, my mom transitioned when I was just 16. I just recently lost my father. Okay, I come from an era and a generation where not only did they not talk about money um, in other topics, but we didn't talk about things like this and strategy. All I knew was you got to get some insurance or have an insurance policy on you. And like you broke it down to me, that's just for burial. That's not set up for wealth accumulation. Once the funeral home and everybody who is a part of that system get their monies or their resources, then the family get what's left. And then it's up to the individual who's on the policy to either, if there are children left behind, to take it and invest, or
absolutely.
yeah. So in saying that, I missed a lot of things, which is why I've shared with you. I gotta hump it in the next, and it's not bad because what you showed me is possible.
Yes, ma'am.
So I'm not worried. You know what I'm
Yes,
saying?
ma'am.
I just know I just gotta exercise a little bit, put away a little bit more in order to be on the back end with the vision that you showed me for what I want to do in the next 15, 16, I said 16, 15 years, 16,
Yes,
yeah,
ma'am.
15 and a half, something like that.
Yes, ma'am.
But anyway, this, John's going to keep sharing with us. Please follow him. I'm going to put up his website. Though he got some work going on with it at this point, but this is the site. So do check it out. Where did I put the link? Come on. There we go. Well, that's the link for it. Please check out this website. And John, what's your business phone number? You mind me
Yes.
putting that up for you? Hold on. Let me get the typing so we can John's contact number.
Yep. It is 803.
Okay, 803
727.
72. Oh, that's my home area code. So look, I know we in there. 727. All right. 6153.
Yes, ma'am.
Okay, and that's 803-727-6153. You know, you just put stuff in and you don't even pay it no attention. But y'all, that's my hometown area code, 727. So y'all know John is, this divine right here. This is divine. And I'm glad that you stuck with me. You didn't hound me, but every once in a while, Miss Yah-Tay,
Yes,
you ready to have that conversation?
Yes, ma'am.
Not yet.
Yes,
Miss Yah-Tay, you ready to have that? You know what? Yes, I'm ready to have that conversation. Thank you for your patience with me.
Yes, ma'am.
So if y'all look John up, let me put this on the timer so we got it and we can show it. Do contact John at 803-727-6153 if you're interested in getting more information from income to impact, building wealth, protecting your assets, and creating legacy. I got some comments here. Let me step in and answer these comments. Wike says, hey, everyone. LaDosha says, hey. I'm sorry, Wike says, hey, LaDosha. Hey, Rico. Thank you for joining, Rico. We appreciate you tuning in. Tonight's episode is about from income to impact, building wealth, protecting assets, and creating a legacy with John. Even though I brought him on to kind of talk to the barbers, the entrepreneurs, and the beauty industry professionals, this information is evergreen, and it can be used no matter what industry you're in, what age you're at, preferably you're young, so you can get this down and have those systems in place. So when you get to my age, you're good, you know. But it's never too late, and anything is possible with God.
Amen.
And I so believe that.
Yes, ma'am.
So the next question that I want to ask in this series, this segment, is what's the difference between having a successful business and having true financial security? You touched on this, but I want to break it down where people understand the difference between a successful business and having a true financial security.
Okay, having a successful business, I believe it's long term. You know, if you have your business set up the correct way, and you have forward thinking advisors, continually, because the financial service world, Yah-Tay, is always changing.
Right.
Compliance, regulation, taxes.
Right.
So having the proper people, you don't have to be the jack of all trades. You know, if you want to have a sustainable business, and have something long term and durable that's going to be here for you and still go through the stress test, because every business have it slow but still can be sustained. I believe that is the key of having a strong, successful business versus just being successful, because you could be successful and not durable.
Right.
So, and I believe this, having the proper people working for you, having, like I said, a team, I go back to that.
Mm-hmm.
And so we can collectively bring all those important pieces together to scale, to build,
Right.
grow, and scale up. And eventually put yourself in a position, if you want to, you know, you have options. Basically, a successful long-term business have options.
Okay.
Yes, ma'am.
So the true financial security is in the long-term strategy,
Hmm.
but you can still, like you said, have a successful business, even with the highs and lows that a business goes through and will go through. Because, like for us, example, our peak seasons are usually August, whenever school is in,
Hmm.
to the end of the year, because you got all your holidays, you got your school, kids getting cut on a regular basis, and we roll right into our holidays. January, after the first of the year, kind of tapers off a little bit, and then you got Super Bowl, Valentine's Day, then it taper off a little bit. Some people might celebrate some of the holidays and, St. Patrick's Day in March, then it tapers off a little bit. Then you got Easter. Then you roll around to Mother's Day,
Hmm.
Father's Day,
Hmm.
and then you got the summertime, which, kids tend to go a little bit longer unless, as someone that's a business professional, then they tend to, stay on their regular schedule. But in most
Oh,
cases, that's pretty much like a year calendar of just a general synopsis of barbering, you know, especially those who focus more with children. In my
absolutely.
case, yeah, focus
And
more with children.
and another thing too that
Uh,
that helps out, that I wish that somebody told me when I first started, is having working capital.
okay.
You know what I'm saying? Because that's so important, because businesses, as we go through seasons of dry spells and
Right.
things like that or whatever, but having capital on hand that can
Hmm.
help you navigate those tough terrains, those financial terrains, or those hard spots. So
Right.
having working capital right there to sustain the business, even if the income is not coming in as you
Right.
want it to, you have, a line of credit there. You know what I'm
Right.
saying, to keep that thing going until you get back on target. So
Right. Right.
yeah,
Right. That's awesome there. That's so the key takeaway from this segment and why financial literacy matters: income, as you can see, and wealth are not the same thing. And he just broke that down. So you generate income, but wealth is about building long term, correct? And just
absolutely.
my little what we call it layman's term.
Yes, ma'am. Yes,
Income
ma'am.
is that thing you got it coming in on consistently, but wealth is something we're looking at long term, building, accumulating, and what you talk
Compound
about, the
interest.
interest and
Yeah,
all of that good
yeah,
stuff,
yeah.
you know.
Arbitrage, all that good stuff.
Right, right, right. So for segment three, we're talking about wealth building for barbers and beauty professionals. So he kind of touched on that, but these next set of questions are going to be geared specifically toward barber and beauty professionals. So turning your craft into long-term wealth. And he touched on it about having systems in place, having a team of advisors, managers, um, those individuals to help you put together that plan so that you have the longevity there. And when your business goes through those peaks and valleys, for which it will, that you got the lines of credits, you got the capital set aside. Take for instance those who do it just slipped my mind, booth rental or even suite rental. When you have them slow moments, you still got to pay that booth rent, or you still got to pay that suite rent.
Yeah.
on X week or X once a month, every week or whatever, your contract specifies. You still got to take care of that. They're not listening to, well, I ain't have no clients today or this week, or I was slow. You still got to be able to make those payments. So with him saying, planning, having those things in place. So now we're going to talk about wealth building for barbers and beauty professionals. The first question that I have, many of our viewers are self-employed barbers, stylists, braiders, and salon owners. What financial habits should they begin implementing today? More specifically for our new individuals coming in, those barbers, those braiders, those stylists who are just starting out. What are some things that you would advise them to set up or to put in place besides contacting you?
Yes, ma'am. Absolutely. Well, one of the things I would do is we have programs that can. What we like to do is we like to customize, we like to optimize. There are strategies out there that will cater to people that are barbers, beauty salon owners, self-employed people. They can put their money into an instrument that will grow for them safely. Earn somewhere between 7 and 10% rates of return. On average, could be higher, but it's tax free. And the reason why I say this is because a lot of times we don't just need money long term. That's a play, but we
Right,
also need money right now. So
right.
to have the liquidity there as well. So when they take the money out, Yah-Tay, they can
Mhm.
still earn interest on the money that they take out. So they never interrupted the
Borrow.
interest that
Wait,
they're
wait, you
earning.
say borrow. Hold
Yeah,
on. You told me
yeah.
the key word, borrow.
Yes, yes,
Right, right.
borrow. They can borrow that
Borrow.
and still earn interest on that
Right,
money. That's the
right.
beautiful thing. It's called arbitrage. And we teach our clients how to create a spread. So we're able to basically, I want to scream this out to the house out, right? I
Okay.
want people to understand you can control your financial future. You don't have to worry about, you don't have to rely 100% on the systems and the different things or whatever. You can optimize it. You can strategize. You can customize these plans to your liking. The most important thing is too, you can put as much money into it. You're unlimited on how much money you can put into it. So I will advise, our clients, our viewers, they're looking to put money away safely, without it being disturbed with market laws and taxes and all the things that can erode your wealth, and
Mm-hmm.
you have full control of it and it still earns interest and you have the ability to take out without triggering taxes or penalties. Then those strategies are very good for people because it's flexible.
Mm-hmm.
Also, when down seasons come, you can access that money to take care of whatever you need to take care of your business. So you
Mm-hmm.
got money, money on hand as well, and it's growing for you long term. And
Right.
so, yeah, and also too, let me add this as well, is that a lot of times I like to, let me just kind of break it down a little bit.
Go ahead. Go ahead. Go ahead.
Um, we have plans in place. Okay. Number one, it does come with a death benefit. Okay. Now we're not
Okay.
going to purchase it for death benefit, but it's going to come with a death benefit because it is an insurance policy, but we optimize and design it for cash accumulation. So it's going to come with a death benefit because as you're building wealth, something may happen along the way,
Right.
unexpected, right? And if that happens, worst case, it's going to trigger an inheritance for your family immediately, right? Number
Right.
two, as you're building wealth, you may get sick along the way. Don't want that to happen, but if it does, a heart attack or something like that happens, and you're no longer able to work because of your illness or your situation, how can your
Mm-hmm.
family still sustain? Well, the
Right.
insurance portion is now transferable to a living benefit to access that you can access that money while you're alive if you became ill and you're no longer able to work.
Mm-hmm.
So we want to make sure all bases is covered. But guess what, Yah-Tay? What if none of those things happen? What if you didn't die too early?
Mm-hmm.
And what if
Right.
you never got sick, right? Then now we can turn on the income source where now you can have a retirement income as long as you're alive. So we
Right.
want to make sure first, second, and third bases are covered. Okay, so there's no blind spots in your financial portfolio.
Gotcha.
Okay.
Hey, y'all want to know more about it? Got to talk to John. The number is 803. Let me put that number back up again. 803-727-6153. Let me put that number back up again. If you're interested in learning more about these products, please check him out. Please check him out. And thank you for that answer in terms of our barbers and stylists and braiders and salon owners, what financial habits they should begin implementing today. And that is, man, if I could turn back the hand of time, but it's still not too late. It's still not too late. So with that, going into the second question, what retirement planning options should independent professionals be considering? I know you have a lot of products that you offer. So just in general, are you partner with others who offer various things? So just in general, when it comes down to retirement planning, I know I ain't going back with that one I told you, because I can't access my money when I want.
Yes, ma'am. Yes, ma'am. We have very. I mean, you got, man. The list is long. It's like, we have. You can do max funded insurance contracts. We got Kaizen premium finance. Basically, and let me throw this in for them as well. Most people were taught when it's time for them to buy a house, they go to the banks and finance it. They want to go to a car lot. Okay, we all do. We go finance that car. But what if I told you that there were strategies that you can finance your retirement? What?
You're like, what?
You can finance your retirement just like you finance that car? Yeah. Call me when you want to know more information about that as well. I'm going to keep you up on that.
Okay.
But yeah, you can finance your retirement. There's the strategies that we have for that as well. So we have multiple plans. All of those plans are not going to be ideally for everybody because, like I say, everybody's financials and everything like that is different.
And their goals, their financial goals, and where. So like with me, like you shared with me, your financial goals, where you are in your life, in terms of business, relationship, age.
Yes.
We got to throw that in there as well. It dictates where you're at, because I shared with you some things, and like, I'm not interested in doing this because this is this. Right. I'm not interested in doing that, and this is not my American dream. This is my American dream, and this is, so you were able, based on what I shared with you, in the next
yes, ma'am,
15 years, you was able to, okay, well, this is based on your scenario and the outcome that you want in this time frame. These are the options. Yes. And y'all, not only did he, because it is personal information, not only did he provide me with real numbers, I was like, okay, and I was able to make the adjustment with the numbers based on my contribution. And I was like, oh, okay, so that lets me know if I go here, if I, go heavy on this end, this is what it'll look like in 10, 15 years from now.
Absolutely.
So I just got to say thank you for hanging in there with me, because I'm not one that's easily sold to you, if you know what I mean.
Yes, ma'am.
It takes a lot, for me to, I guess I'm a little hard-headed in that sense, but I was like, okay, this is some real strategy, and this can really assist me with my long-term, short-term.
Yes, absolutely.
A short-term goal, because I gotta be realistic about the time that I have behind me versus the time that I have in front of me, which is why I asked John to come on, because my niche is working with the younger barbers and getting them the information that they need so that they can build a solid foundation and elevate from there. I've always work with young people from that perspective. So I'm taking that same mentality into what I'm doing in terms of helping them to build that foundation. So when they get to where I am, it's smooth sailing, providing that they put the right things in place to support them.
Yes,
And
ma'am.
it won't be so challenging or cumbersome on the back end if, they got the tools and the information on the front end.
Absolutely.
So that was why I was like, John, you got to come on and share this information with them.
Yes, ma'am.
So my second point with that, or second question, I think I ask? Yeah, you did answer that. What retirement planning options should independent professionals be considering? You talked about that. Number three, when it comes to taxes, business structure, and asset protection, what are some things entrepreneurs often overlook when it comes to those areas? Taxes, business structure, and asset protection. What are some things that they overlook in those areas?
Well, um, a lot of them overlook. They just think filing taxes through the CPA, staying compliant, and not having an audit. They've done the best they can. But in actuality, I don't know if you know this or not, but there's over 75,000 pages in the Internal Revenue Code.
You told me that.
Yeah. And
I
so
know it
know it
now.
now. Yes, ma'am. So with that
Right.
being said, a lot of them never really go deeper into the situations to help bring more money back to the client. Most CPAs are, and they're good people, but they're just kind of surface, file it, get the paperwork, make sure you stay in compliant, and that's it. But a lot of them, they're not proactive. So with
Okay.
having a team year round, they'll go deeper into your situations. So now they can help make sure that there's no misplanning, that there's no missed opportunity. So now you can recoup the money that you would have paid the IRS, and now you can bring that money back into your business.
Okay.
Same thing with business advisory. You know what I'm saying? When you're running an operation, you want to make sure that one day, hey, listen, do I want to either sell this,
Mm-hmm.
or how do I exit this? You see what I'm
Uh-huh.
saying? So
Yeah.
most people don't have advisory on staff that lead them through that.
Gotcha.
So just in business, and so that's what we do on our end. We make
Okay.
it that is, we're like the pilot. You know what I'm saying? You don't know, you probably don't see the pilot, but you trust the pilot to get you to your destination. And so
Right.
we're
Right.
financial pilots to help the client navigate those uncertainties, and making sure that safely they can, exit. They can, save more money. They're more solid. They don't have any, hiccups along the way.
Mm-hmm.
And so they have that forward thinking advice. And that's why I decided to add the element of the architect family office to our practice, because I didn't want to just be a agent that just selling a product. I wanted to make sure that every part of my client's financial life, I wanted to be the center of their universe financially. I
Right.
want to make
Right.
sure that all of those pieces are together. So now we don't have any worries, and they can truly be, free and be at peace financially.
Right. That's some good info. So for the individual to have the holistic aspect of financial planning, not just personal, but the business
Business.
wise,
Yes.
you all handle that. And it's not one size fit all. It's
Right.
based on the individual's scenario. Because, like I just shared, there are a lot of different factors in place. Your position. You are you self-employed? You could be employed?
Right.
What age are you? Because
Right.
that has a lot to do
Yes.
with maximizing your options as well. And yeah, it has a lot to do with that.
Because the longer you wait, the more it costs.
Right.
So
Right.
good
And the
question.
more you have to pay in,
Or you have to pay in.
because
Yeah.
yeah, the more you have to pay into it
And
in
those
order to reap the benefits on the
absolutely.
back end.
Absolutely.
at your designated time.
Yes. Yes. And that's a beautiful thing too. Because some of like let's say for an example, a Roth IRA, I think it caps out around 75,000 or $7,500 for contribution. If you're 50 and older, the most you can do is 8,000. But with some of the strategies that we offer, because you got to think about it, you know, sometimes people get information late in life. They may want to put more into it to kind of catch up, right?
Right.
And start utilizing compound interest
Hmm.
as early as possible.
Hmm.
These accounts, we're able to overfund the account. Okay. So give the client more room to put into it. That's if they're starting out a little late. Now,
Right.
my younger people, my younger audience, it's good for them as well because they might not have to put as much in because they may be just beginning their financial journey. They might not have a whole lot to contribute. So it's good for them if they had 30 years of compounding over time. You know, they can still reach their financial destination without having to put so much money in because they got so much life expectancy or so much accumulation.
Right.
Yeah.
Right. So to my young people, it's best to start now.
Yeah. Yeah. Absolutely.
And this financial literacy, it does matter. And like I shared with you all, I don't know everything. I'm still learning. I'm still being exposed to different things. But I will tell you this, with what I knew and what I'm gathering now through John, even though, like I mentioned before, there I don't have as much time in front of me as I do behind me. The products that he shared with me still give me hope. You know what I'm saying? It still empowers me. It still um, makes me feel that I'll be able to achieve the goal that I want to achieve. Now, granted, I'm gonna have to, deposit a little bit more, but that's okay. You know what I'm saying? It is what it is, which is why I say, John, you got to come on and share this information with our audience. And I know every situation is different, so he can't name this product or that product and say the other product. Is really based on your situation. I also talked to him about, I'll share this, trust, doing some different things with my business. Um, you know, so yeah, he got some things set up to help me set that up, you know. Yeah, so it's a lot. I was a little overwhelmed when I started getting the information and being transparent. I felt like, well, dang, why am I just not getting this? You know, and though there's a lot of information out there on the internet streets, it's something different when you're able to talk with someone and share your unique situation, and they have the wherewithal to help you um, put a structure together and put some things in place to help you achieve that goal.
Yes.
So, to those of my folks out there who are a little bit older, it's still time. There's still time.
Yes, ma'am.
There's still time. So, with that, I want to ask, I want to share this takeaway before we get into the next point segment. We got a couple more, but it's not a lot. It's not a lot. Um, Building wealth requires intentional planning, not just hard work. John spoke on it. He said it in so many different ways. So the takeaway from wealth building for barbers and beauty professionals, building wealth requires intentional planning. And that's what he's talking about now. Putting systems in place, being strategic. And there are many things like I've shared this with him. At this point, and it's as of right now, I'm not interested in purchasing a home, and that's just me. I have my reasons for that. Others may want to do it. They may, they may not. But at this point, I know that I can make my money work for me in other areas. And I don't have any children. I'm a little more seasoned. So um, uh, all of those things that go into it, I don't know that I necessarily want to take on that responsibility. I'll just say that. So with that being said, and that's how I feel now. It's not to say in 2 years or 3 years that may change, but I do know that there are other ways that you can invest your money and make your money work. And, there are other things that you can do. So with that being said, building wealth requires intentional planning, not just hard work. So create your own American dream.
Yes, ma'am.
What is the dream for you? You know what I'm saying?
Yes, ma'am.
What does success look like for you? Where do you want to be? How do you desire to get there? And put those things in place to help you get to that point. So with that being said, segment 4 is about protecting what you build, reducing financial blind spots. John kind of talked about this, but we're going to delve a little bit deeper into some of these blind spots. So the first question I have for you in reference to that, you often talk about helping clients reduce financial blind spots. What are some examples of blind spots people don't realize they have?
Good question. So one of the blind spots are taxes. I equate taxes to cancer in a body. You want to
Okay,
get rid of it as quickly as you can in order to live.
right.
And so many cancer is taxes is like cancer, a lot of it in our financial lives. And so you want to remove or eliminate as much tax as you can, so your retirement is not eaten away with Uncle Sam. Uh,
Gotcha.
so there's strategic ways that we can help mitigate that. Another financial blind spot is asset protection. A
Okay.
lot of times, when people either pass away, they don't have certain things in place. Now they're in probate. So what they built is now off with the government. So you want to have things in place to protect that as well. And it's,
Hmm.
you own that, and that's just, and all it is just planning. We can put, your different trusts in place or wills, whatever. This depends on what the situation is,
Uh-huh.
um, to customize it how you want it.
Hmm.
So it's not affected. That's not a problem when you pass. So we can definitely put all your assets in protection with that. Also, another financial blind spot is debt. That's terrible because, see, here's the thing, and this is what I help a lot of my clients with, Yah-Tay. Uh, we've been taught that for people that want to buy a home and different things like that, the way to go about it is a 30-year mortgage. Most people, they go buy a 30-year mortgage or whatever, they finance a 30-year mortgage. Why is that? When let's say, for an example, you had $100,000 in you, and you put that you purchase $100,000 mortgage, you finance with, let's say, Wells Fargo, right? And it's going to finance for 30 years. It's going to take you 30 years to pay off the house, but you can buy $100,000 car and be done with it 5 years, maybe 6. Why is that? Why is it that you could take care of this car in 5 years, 5 or 6 years, be done with it, but that same
But
hundred
it
thousand
takes
dollar
you
house
yeah.
is going to be 30 years? See, we're on the wrong side of compound interest, and I really believe this, Yah-Tay. That's why I'm so passionate about this. People are on the wrong side, and it's by design. By the way, it's not by accident that they don't teach this stuff, because financial institutions are not really for people; they're for profits.
Yeah.
And so they're not going to inform us like we ought to be informed so we can make the better decision.
Better
They need
decision
to keep us in the dark about a lot of stuff so
and
they
make
can
an
maximize.
informed decision.
Right.
Yeah.
And that's why so many people are in debt. They're on the opposite side. Because when most people finance a house, they finance and they're overcharged for the next 10, 15, actually, yeah, 10, 15 years. You're paying more interest than principal. But there are loans out there in ways that you can actually take that same 30-year mortgage, pay it off 5 to 7 years without you paying extra principal payments. I've done it with my clients.
Hold on, we got some comments. We got some comments. I got to back up a little bit.
Okay.
Would you say, okay, so WK says, here's the first comment. Would you say that a lot of new stylists coming up are looking for instant wealth and not taking the time to actually build their portfolio in real wealth? I'm going to answer from my vantage point. I think that the new stylists and barbers don't have the information. And oftentimes the new stylists and barbers coming in, they're 18, 19, 20, they're in their early 20s. So unless their parents and their barber instructor is versed in this information and they provide that information to them, oftentimes they're just looking at getting out there. I got to get these folks on the book. Let me make my money and pay my taxes. And that's pretty much it. They're not, oftentimes they're not looking at the long term, you know, the retirement side, the wealth building side. If something happens to me, I injure my hand or I injure my leg or I can't work or something happens, then these are my money makers. What do I do, you know, with that? So yes. I don't think they have the information. John, you want to take that before I go into the next two comments of what WK says here?
Oh, absolutely. I agree with you 100%. You said most of the people was taught to just get out there, start grinding, get the calendar filled, you know, make money. But I don't think that this side of the business was ever like I said, unless they come from a background that already established in that, they're not going to just have that just right there available unless they, you know, connect with somebody who can actually guide them in that right direction. So yeah, I agree.
Right. So WK says that's a good analogy. It definitely like cancer. Yeah. Yeah. That was an excellent analogy. And WK also says, wow, I didn't think of it that way at all. Talking about the mortgage, the 30-year, the car loan, you can pay the same amount depending on what type of vehicle you have in 5 to 7 years at an interest rate. And then for a home, you got an interest rate and it's 30 years. And then don't refinance it or let the market change like you were sharing with me. Yeah. And then that interest rate, yeah.
So, but yeah, there's a lot of financial blind spots. And so the great thing about financial advisory is that you have a team of people that can always have eyes on it for your best interest, because the client, you know, when they come to us, they want simplicity and they want results, right? Yeah. We take on the complexity, we give the clients the simplicity. So we have a team on staff to actually help the client from A to Z with those things. And so we look at their priorities and we make sure that they don't have those blind spots. We let them know, hey, this is what this is what this look like, and this is what we can do to solve that. You see what I'm saying? Right. So they don't have to worry about it. So it's always forward thinking. So the client don't have to be left on his own trying to figure all this stuff out by themselves. Right. You know what I'm saying? We just, you know, let the experts take care of what the experts do. We just let them do their job, and we just keep, you know, they'll inform us what's next.
And the beauty that you share with this, not only you have a team of experts in various aspects of this architectural family, but they're forward thinking. That's important. Yes. Just like you know, AI technology is constantly changing. Yes. So if you got a CPA or someone who isn't digging deep into those, what you said, over 700 some laws,
75,000 pages. Yep.
70. Okay, if they're not digging deep to where it's in your best interest, nor are they keeping abreast of what's going on, and they're continuously giving you the same thing each year, it's not really a benefit to you.
Yes.
You know what I'm saying? And then I'm sure you're paying them, and they're not really truly working for you and on your behalf. Absolutely. From that perspective. So Absolutely. What you're bringing is the forward thinking.
Yes.
And being forward thinking or having that mindset, you always gotta be on top if you're forward thinking, because you're looking to see what's next. You're looking to see what's ahead.
Right.
You know, contingency, and then you're communicating with the client. So you
Absolutely.
still stand abreast and communicating with the client while looking at these things,
Right.
you know, beyond the, yeah, beyond the horizon. Yeah.
Yes. And also too, just to add to what you just said, um, this is really the way to go. Because when I sit down with a lot of times clients, they have a lot of things going on. Sometimes I have to come and do a cleanup job, but they have a CPA. A lot of times they have accountants. They have all these different professionals. The problem is none of those professionals talk to each other.
That's what you was telling me.
They don't talk
They're
to
not talking to, they're
Yeah.
not in communication with each other.
Right. So if
So
they're not talking to one another,
how
Yah-Tay,
can they best serve the client if
come
they're
on,
not communicating?
come on. So everybody, you got all these professionals. They got 5 different tables. What makes me different is I bring all those tables into
To
one.
to the table. Yeah.
Right. So we
So
can have
everybody is talking and communicating for
absolutely.
your best interest.
Right,
Yeah.
right.
Yeah.
And that makes it better for the client experience because it's frustrating for you to get you
Oh
hiring
yeah.
people and you get fragmented advice.
Right.
You never
Right.
get the whole picture of your financial life. And so that's what we're looking at. We want to bring the entire financial piece together. And so
Gotcha.
instead of having a bunch of products here and a bunch of products there and don't correlate with one another, why not
Right.
have one blueprint to solve all your financial problems?
Mm-hmm.
It makes sense.
Because look, when they building them homes, they, one set of blueprints, they might have a copy,
Right.
but it's only it's one set of and
Yes.
I've been in the design field, so
Yes. Yes. Absolutely.
yeah, you get that one set, and you got to work from that. If there are any changes, the changes are going to the
To the blueprint.
to the bit. Thank you to that blueprint.
Yeah.
This takes me into the next question. Why is asset protection such an important part of financial strategy? I mean, you can look at it as common sense, as my mom would say, but tell the people in the back, why is asset protection such an important part of your financial strategy
Oh,
or a
absolutely.
financial strategy?
Yeah. Financial assets are very vital. It's because this is what you're working for. You
Mm-hmm.
know, this is what you want to be able to pass down to your generation. This is what you want to be able to hand down to that person that you choose to move forward with your legacy.
Mm-hmm.
And you don't want that tied up with, in probate and things of that nature. So one of the most important assets is your income, your valuables, your legacy. Those things are very vital. So there's different things that we have in place to customize and make sure that those things are vital, and making sure that those things are not just you're not at liability with what you've already, because you don't want to build something and it just goes away just like that.
Goes away quickly. You
That
want to protect
foundation,
it.
yes,
Ladosha says this is really good info. Ladosha, so y'all remember a couple podcasts before I was telling y'all I was having a meeting with someone. This is the man, and I've actually had 2 meetings with him, and we're gonna have another meeting next week. But this is the young man that I was talking about when I was sharing with you all. I gotta wait. I gotta get in first to see what's going on before we share this with you. But I'm one for sharing the wealth, sharing the information. My motto is teach, share, give. Teach what you know, share what you have, give what you can. And this was, and I'm so grateful that he decided to come on, because I was like, John, this is some good information.
yes,
He
ma'am.
was, yeah, y'all. I'm serious. I know everything happens for a reason, and all things work together for the good of those who love God and are called according to his purpose. So I know that I'm called. I know that I'm in my purpose. So though I'm a little more seasoned on this other side, I know that I'm with his support and assistance, I'm still going to be able to achieve some of the financial goals and things that I desire, um,
Yes, ma'am.
with his support. Even though yeah, I got to work a little harder, but it's all good. It's all good.
Yes, ma'am.
WeK says here, it really is LaDosha. He knows his stuff. When I tell y'all, I had a list of questions, and he didn't flinch answering the questions that I had, on down to commission, to who gets what, how they get what. Cause yeah, I want to know, and he didn't flinch. That's a good question. This is what happens. This is how it goes. And I'm like, man, putting me at ease. I'm like, okay. And it also, I'm so, y'all, I'm getting there. It has truly empowered me, even in my current situation. He seen my little list of things I got to finish taking care of. I said, John, I want to knock these out too. He was like, you know what? You already doing the right things. Stick with it, and we gonna work this plan. And I showed him from the time he saw me the first time to the second time. I done knocked out this, and this.
Yeah.
Okay, you doing well. So that is encouraging as well. So let me get to this next question. How can business owners begin creating a financial blueprint that protects both their family and their business? I'm going to put this number up because I know how they can. But go ahead and tell them, how can they create a financial blueprint that protects both their family and their business?
Good question. So what we can do is we can make sure that the foundation is solid. We can use life insurance as a tool. We can look at
not burial insurance, y'all. Not burial insurance.
Not burial.
Okay?
Yes,
there's a difference.
Yes, ma'am. Absolutely. We can also help them talk about, because I know children is very important to parents. So we can also help them teach their children financial stewardship. We can help set trust and estate planning, protect the family values. We could talk about real estate. So there's multi directionals that we can actually go to when it comes to that. One of the things that I want to kind of highlight on too as well is that a lot of times business owners spend a lot of times making money. But what if we can not only make money, but we can create the system and then teach the children how to manage that system and then keep that going generationally? Because we don't want to always be grinding and come to, and because the grind is going to stop. One day you're going to get old, right? One day you're going to get tired. So we want to always have systems that's going to outlive you and outperform you as well. Wealthy people, they have systems. They have systems, they have structures. And so we want to make sure that there's no piece that's
tax shelter, tax deferred, tax. What was that other one you told me? Tax something or another.
Yeah, so it's
you told me a lot of different things, but I'm just like, wow. My family didn't get this. My peoples didn't know this. Well, I ain't gonna say that. The ones that I know didn't. Yeah.
Can I share some with you?
Yes, go ahead.
What I'm saying is that that's why I'm so passionate about this, because this has been out there since the 1800s. So it's way older than us.
Yeah.
And tax planning, risk mitigation, wealth management, legal services, business advisory, that's what wealthy people do. They have these teams of people doing all of their work. You're not going to sell one product to them. They got to make sure, like you said, Yah-Tay, that blueprint, right?
It goes through all the people on the team.
Absolutely.
And everybody got a okay from each vantage point, whether it's the business, the life, the whatever it is.
Estate planning.
Everybody got to give an okay on
Absolutely.
Right.
That's the way it should be. And also
Yeah.
to succession planning for business owners. One day they want to sell the business, scale the business, grow the business, retain what they currently have. How do we do that? We got advisors on staff for that. So
Okay.
we take the guesswork out. You don't have to go out there because we're good at making money. Business owners, barbers, beauty salon, they're good at making money.
Right. Right.
But the experts deal with sustaining the wealth.
Right.
Right. So you can be leveraged because you can
So
get
the money that we make, we want the team to be able to not only help us make more,
yes,
but also help us to sustain it as
sustain.
well.
Yeah, absolutely. Scale
Gotcha.
it. And then
Scale it. Sustain and scale, because sustain is keeping it,
yes,
but we want to scale it as well.
Yes,
Gotcha.
ma'am.
Gotcha.
Yes, ma'am. And so
Wow.
it's the same concepts that the Rockefellers had in the early 1800s. They had a problem. They had a lot of money, but they had a lot of advisors telling them conflicting information. The CPAs didn't agree with the wealth planner. The wealth planner didn't agree with the attorneys. So they had a lot of conflicting advice. So what they done was they interviewed and hired the best of the best to only work for their family only. And so now, but the thing about it is these professionals had to come together and work as a team collaboratively. So now that family, that's exclusive to them only. And that model is so powerful. The elite wealth of the day still utilize it. The Waltons, Michael Jordan, Oprah Winfrey, they spend millions of dollars, hundreds of millions of dollars to inquire that particular value of the family office. So I have that model. Okay, I operate in that model. So it's not just me that comes to the table. I have a team of over 60 people. So there's nothing financially we can't do ever. I mean, we can do it all. We're full house.
Full service.
Full service.
Architectural family office.
Yes, ma'am.
Whereas the whole family is involved.
Absolutely.
With the best products for the client.
Yes.
Gotcha. Yes. Wow. So the takeaway from this segment, we got 2 more to go. Protecting wealth is just as important as creating it. So in a nutshell, John has talked about protecting what we build. He's given us some examples, but you got to know protecting that wealth is just as important as creating it. So you can't just protect it and leave the creative side hanging to the wind. You got to be able to protect it as well as create it and protect it. So the next segment is about generational wealth and legacy. You've touched on it, and as you all can see, these various segments have connected one to the other. So in this one, we're talking about creating impact beyond our lifetime. And though I don't have any children, I do have nieces and nephews, and I don't want to just leave. No, I'm not going to leave them dead, but I don't want to. I'm going to say it. I'm not going to leave them dead. I do want to leave something, and not just, after I'm cremated, they have the what you call that burial insurance.
Burial, yes, ma'am.
Because it ain't that much. Because I'm getting cremated.
Yes, ma'am.
Telling you now, y'all heard it from my mouth. Yeah. I just feel like that money can be better used. And besides, ain't nobody coming back to check on it, pull up the weeds. And y'all think I'm laughing, I'm joking, but I'm dead serious.
Yes, ma'am.
And some of the things that I've heard through folks in position, I'm like, nah, we gonna solve this. But nonetheless, not to be morbid, but creating impact beyond your lifetime. Yeah, let me see. DN or N. Okay. So for point number 5, creating impact beyond your lifetime. And that's what I desire. Once I'm gone, the videos will still be up and all of those things. LaDosha says, I'm with you, Yah-Tay. LaDosha, I, and I've said this after my dad's passing, that really, and I'm still um, gleaming from this, his transition, and things are still being revealed to me, and things are still opening up to me, and I'm viewing things differently. And I think too, because I was able to have a conversation with him as well. But nonetheless, I just, success is different for me. I'm looking at it. What does it mean for me? The American dream, not somebody else's dream. What does it mean to me? What is my dream? You know, what is the dream that I have for myself? And then when I'm gone, what do I desire to leave? Because oftentimes our people leave us bills and debt, and they fighting over, well, who this and who that or who the other. As a matter of fact, my stuff lined up, and I'm getting some more things in place. Not that I'm going anywhere anytime soon, but I'm putting the reins on some, you know, some things, so that it's airtight, you know, in terms of how I want things, what I want. Yeah. Yes. But anywho, let's get to this next question, because we got one more segment after this. We hear the phrase generational wealth often. What does that truly mean? What does it truly mean when you say generational wealth? What does that mean?
Generational wealth is more than a product, for sure. Generational wealth is you being intentional, and whatever that looks like, because everybody's different.
Yeah.
And we respect that. But if you really have the intention of changing, because most people are working to make sure their families are protected. The reason why we go to work, because we want to be protected.
Right.
That you come in to provide for the people that we care about. Well, when you pass away and you transition, those people still need to be protected.
Right.
Right. So your income and money, those things kind of still need to come in to make sure that families still sustain and actually not only sustain, but move up, because that's the way it's supposed to be.
Right.
So we put programs in place like that all the time. And sometimes, I mean, it can be whatever, you know, I don't want to just throw a number out there, but you know, I have clients that got millions of dollars, you know what I'm saying, on themselves. And if something like that would have happened, that's their plan. You know, we just have to see what your plan might be or what you would like, and then whatever that is, we can customize it for that. But I like to let people know, you know, don't be I don't know, I don't want to say anything offensive or whatever, I'm just teaching tonight, but whatever you feel like your family deserves, and whatever you feel like,
say it, just say it.
Just say it, right?
Just say it.
Listen, let me tell you guys, man, and I'll say this before, if you do it right the first time, and not only that, put the plan in place. Let's put the plan in place, but let's also teach the family how to be good stewards, because this is how they do it. This is how a lot of affluent families do. They make sure that they are informed. This is the play.
This is the plan. This is the playbook.
This is what is going to happen. This is what you're going to do when that time comes.
Time comes. Yeah.
They've been good stewards. They've been good managers. Not only that, but we can also put trust in place that if they don't do such and such, then they won't get their part of the inheritance. You can customize it like that as well. They got even children, if they don't graduate school and that they don't
do certain things, then they can't take it. You're right.
So
and you know what?
Yes.
This is so important to what you're saying, in terms of putting a plan in place, educating them, and this is how it's going to go. And I bring this up because we oftentimes in our culture don't like to talk about death, period. Oh, what you trying to no.
Yeah.
And then when that time comes, everybody all over the place, you know,
No plan.
Somebody fussing about this and fussing about that, and mad cause somebody didn't do this, that, or the other. And it's like we have to get to a point. Not only are we informed, but we gotta have these conversations. We talk
Absolutely.
about everything else.
Right.
Why we can't talk about this?
Right.
Why we can't put these things in place
That makes
and
sense.
have these conversations? Well, if
Absolutely.
you don't do this, then you don't get XYZ.
Absolutely. Because
You
everybody
know,
have an important place. Everybody have a role to play. And it's
right,
like you're playing football. The goal is to get to the end zone, right?
right.
But in
Make a
order to get to
touchdown.
the end zone,
Absolutely.
you gotta have a certain playbook, right?
Right.
Everybody got to know their roles and responsibility to get down to the end zone. So, I mean, yeah, the family needs to come together, and once the plan's in place, and everybody need to know what's expected and what will happen when that time comes, right? And
Say
because
that again. They need to know what's expected and what's going to happen when that time comes.
right. And so with that being said, so you got the plan, you got the playbook, okay. You have everything laid out. The family now, because here's the thing, we can set the plan all day, but if you don't have the stewardship, people gonna get that money and blow it.
Right.
It's gonna waste, and it happens
Right.
all the time. So
Right.
you want to
Right.
be good stewards. Okay, this is because I've had clients that have passed away, left $500,000 to
And it's
to a individual. He took that money and put some of it away in different accounts, and he's doing really good. He's very young. You see what I'm saying? But he had people in place to help guide him because he's
help
25
guide
years
him.
old. Yes, he's 25 years old. That's a lot of money for him. But he had partners in place to help put it in certain. So now his future's set up, and he still works, but he's set up, and he's one of my clients. You see what I'm saying? So
Yeah.
to make sure that okay, great, that's in place, but we got to make sure we got to be good stewards of the inheritance.
Right.
And that's how
So,
you're
in the
able
good stewardship comes with the information and the education
and discipline.
and the
And
discipline.
yes.
Right. Right. Gotcha. So, in the next question, with generational wealth and legacy, what steps can family take today to ensure their wealth, values, and opportunities continue into the next generation? Now, some families out there already got some, things in place, because some families plan better than others. You know what I'm saying? Unfortunately for me, I come, especially my immediate, with my mother transition early on, all she knew was life insurance. Yes, she worked and had some, we was able to get a certain amount of Social Security, because she paid into it. And my dad, he wasn't in the workforce, but we were all, you know what I'm saying? We were all grown. But be that as it may, I bring that up because the planning was a will. The planning was life insurance. Let me rephrase, burial insurance. You know what I'm saying?
Yep.
That was it. There wasn't anything outside of that.
Right.
And then I got to think, my parents come from a time where, my dad was a baby boomer. My mom too. They just came from a different time.
Right.
Where this type of communication wasn't there for them.
Right. Absolutely.
I still remember my grandfather, he would give us some money. He'll turn to the side, count the money, and then hand it to us.
Yes.
You know what I'm saying? Like, what's that all about?
Right. Right.
I guess he like, you ain't count my money.
Right.
And but anyway, it's just a different time. It's a different time.
Yeah, absolutely.
Yeah. So what steps would they take today to ensure their wealth, values, and opportunities continue to the next generation?
Well,
I know it's what you're talking about now.
Yeah, I would, I would sit down with a professional. I'm available. And here's the thing I tell my clients: I might not be your agent, I might not be your advisor. That's great, but what I like to do is give you the best advice. And if there's something I can't do, then I'm gonna just leave it as is. I'm gonna let you know that. But if there's something I can do, I'll be more than happy to show you what we can do on our side to help you scale and optimize and reach that goal. Because we don't just, me personally, I don't just work to meet expectations. I like to exceed it if I can. The goal is to exceed, you know what I'm saying? So if there's a way
that they say under promise, over deliver.
Yes, absolutely.
Yeah.
So if there's a way if I can sit down with them, I could do a review, see what their goals are, what their priorities are, and what they have, and see if we can come back with a proposal or something that can bring them to, you know, their financial landmark.
Gotcha.
Yeah.
So here again, John, y'all reach out to him, 803-72. I'm still amazed. This number 727. Wow. That, 727-6153. That's the number. 803-727-6153. And the website as well, y'all. So the next question in this segment, and then we'll go into the next one. For business owners hoping to pass on or eventually sell their business, why is succession planning so important? You hit on it, but we kind of fine tuning this and kind of digging a little deep so that we can get this information.
Right. Well, succession planning is very important because a lot of business owners, they can become a slave to their own business. And I can see that, not to cut you off, I can see that in our business because of the nature of what we do. Yes. You know, if we don't have any products or digital products, in my case, like I have a book, if we don't have any products like LaDosha has the right products, it's literally called the right products. It is. That's her last name. But if we don't have products and or items, whether they be digitally or whatever, then we behind the chair. Yeah, absolutely. We behind the chair. WeK says, wow, I will be checking him out. Please do. I'm on this list. And look, I ain't gonna be selfish. I'm like, don't take up all my time. No, I'm just kidding. I'm just kidding. So anything else you want to add to that? Definitely. Business owners hoping to pass or sell their business. Because succession planning. And sometimes business owners, they want to pass their business to their loved one, and sometimes their loved ones don't want it. You know what I'm saying? It can be that way, right? So there's different objectives. So we can diagnose and see exactly what they want, and then we can bring the proper expertise involved to help them look at their business, the valuation of it, what it's worth in the marketplace. If they wanted to sell it, that is an option. But or we can put plans in place, make sure that the business is protected if the family did wanted to keep it in the family or what have you. But there's so many different variables to that. But the main thing is, of course, people want a lot of people want what they want in their family, and that's great. But there's some people, they're a slave to it, and they want to exit. They want to get out of the business, and they want something. They just want to live their life. So whatever that objective we'll be more than happy to work with them and meet them where they're at. Okay, so succession planning basically can be the sale of the business. Yes. And you're able to assist them with that. Yes. It could be an exit plan. Yes. And how to exit the business and still have your money continuously work for you, or preparing to exit the business and putting things in place to help you exit at a particular time. Absolutely. You forecasting it. Here again, we looking at what you said, projection, long range, proactive. Yeah. This is part of that. Absolutely. This is part of that planning. So yes, man. So the key takeaway, y'all, for this point here of generational wealth and legacy is about more than money.
It's about impact, and ultimately, we want to have an impact on our family, or leave behind some sort of impact for them in our absence. And oftentimes, I can't say it that it's happening at a high rate now, because with the information that's out there and what we have at our hands, people may know about this. But in my parents' time, it wasn't like this.
Right.
You know what I'm saying? It was the burial insurance and whatever's in the bank account. And
Right.
then if it's in a will, or depending on whose name on it, that's it.
Yes, that's it.
You know what I'm saying? That's it. There's no wealth. There may be some property, but then that's a whole nother thing. If it's in a will, then you got to go before the court, and then you kicking out money for that.
Yeah.
Because
Yeah.
Anywho.
Yeah.
So the takeaway from this segment is legacy is about more than money. It's about impact. And my prayer is for the barbers and beauty industry professionals is that in getting this information, you're putting together a plan to create generational wealth and leave behind a legacy that's more than just money, but that you're making an impact and leaving something that's impactful for the next generation, whether you got kids or not.
Yes.
And I'm speaking for me, because I don't have them of my own, but I have them. So segment number 6, and this is the last one that's gonna take us into closing it out. Not just yet, but we getting there. And John, I just want to say thank you for your time. I know it's a lot of information. Y'all, he hasn't even really scratched the surface. You know how you have the iceberg at the what is the iceberg? You got the ice at the top, and then you got this whole mass underneath the water.
Yes, ma'am.
We're only seeing the tip of the iceberg. So there's a whole lot of other stuff going on underneath there. And it's so much that I've learned in just this month that I'm like, wow, it's a lot of information. But be that as it may, in this last segment, leadership, networking, and purpose, building strong relationships and long-term success is what we're tapping into. So my first question for you is, how has networking and relationship building contributed to your personal and professional success?
Great question. Most opportunities come through people. Networking isn't about collecting contacts. It's about genuine relationships, serving before asking, thinking decades, not just days, and consistent compound over time.
Yeah.
A lot of my work come from church events, business networking, out in the community, different groups. We always want to be present. You know what I'm saying?
Right.
And in the moment. And so, because I don't want to just be transactional, I want to be relational.
Yeah.
Because the real wealth is in relationships, for sure.
Right.
People are not going to remember you. They probably going to remember me by all the knowledge I have. They're going to remember me by that guy made an impact. It was lasting. When I needed him, he picked the phone up. We were able to do what he said.
When I text, hey, John, I got a question.
Yeah, you know what I'm saying? And that's what people remember.
Yeah.
You know what I'm saying?
I'm going to shoot you that via email. Check your email.
Yeah.
Okay, I got you.
Yeah, you know what I'm saying? And so, but that's what I do. I've been doing this, I've been in the industry now over 20 years, but man, I've been full-time 6 years, and this is all I do. And so and I'm driven to make an impact, because I know what I do and the value that we offer is amazing. And a lot of people need to hear it. Now, what they do with it is going to be on them, but they at least need to know that this information is available.
Yeah. And it's not just about burial expense.
Oh no, man. We no,
Yeah. The
no.
next question, what leadership qualities do you believe entrepreneurs need to develop if they want to build sustainable businesses and lasting wealth? So it's not just about being able to create that money. What leadership qualities do they need as well?
Leadership qualities. They need to be disciplined,
Okay.
consistent,
Mm-hmm.
um, just lead by example. Also, um, be open to learning. Be
That's
open to learning.
big.
You know what I'm saying? Because none of us know it all. Each one
Right.
teach one.
Each
Uh,
right.
invest in your because what invest in your learning. If what you want to master, you take time out for. Get around people that can help sharpen your pencil. Um, and consistency over time. It just little by little, little by little, and next thing you know, your efforts will compound over time.
Gotcha.
And so,
So
yeah,
wow. That's yeah. That's some good leadership qualities from this from a wealth building perspective. You know, the consistency, getting around people who really know more than you. You know what I'm saying? And then investing
yeah,
in whatever it is that you want to learn
right,
about or know more about
right,
investing.
yeah,
And over time, you'll see and reap the benefits of what you're putting into it.
yes, ma'am.
So the next question is, if someone is starting their wealth building journey today, what are the first 3 steps they should take in the next 30 days? I'm going to put up the first one.
Awesome, awesome. Yeah. So I like to, if we want to start their journey, we want to look at making sure that they have, some stored away for short term emergencies,
Okay.
and
So
then we
like a
like a
emergency fund.
emergency funds, right?
Emergency fund.
Yep. We want to also have a strong life insurance policy in place,
Okay.
okay? Because we don't know what tomorrow's going to bring.
Yeah.
You know what I'm saying? And then we want to also um, look at a long term play as well, money that we can just store away and we ain't got to touch it for a while.
Okay. Gotcha.
Yeah.
So y'all heard it. Y'all heard it from there. Um, the takeaway from this segment, leadership, networking, and purpose. Success grows through relationships. He talked about that. Leadership and intentional action. You got to be consistent. You got to put yourself in position in places. And it's not gathering cards. It's about building those relationships, nurturing those relationships. Not always what you got to start out with what can you offer? What can you bring? Um, how are you sewing into the individual,
Yeah.
not with your hand out. You know
Right.
what I'm saying? But um, that's how success grows through relationships, leadership, and intentional action. We got another comment here. Wike says, "Is high yield savings good? Is high yield savings good idea?" Oh, Wike,
Oh,
you got to talk to him about that because I was talking to him about some savings, and when he broke down what the bank do with the money,
yeah.
I'm like,
Yeah. Yeah.
well, dang, is that why it take us so long? If
Yeah.
we got X amount of dollars in the bank, we can't just go to the bank and get a large sum of money out. They gotta call somebody to get that money to you, get
Yeah.
it back to the bank before you can.
Yeah.
Anyway, just give them a call.
Yeah.
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 Talk about learning some stuff. Only keep us.
Yeah.
I'm not a financial advisor. Let me just hush. Talk to John, y'all. All
Yeah.
right. So this is like a rapid fire round, and just whatever come off the top of your head, and then we're gonna close it out. Nothing real challenging. Just whatever comes to mind. So, and it's about 6 of them. What's one money myth you wish people would stop believing?
Uh, what's one money myth that people start? I can't afford it.
Okay, let me get this question real quick. Yah-Tay says, I'll be getting a hold of you. This discussion is making me think of my life planning and how to turn things around. Yah-Tay, when I tell you, when he sat down with me, he literally came and sat at the table and broke some things down. I was like, wow. And like I mentioned to y'all earlier, I felt some type of way because I'm a little older, yet at the same time with the things that he showed me based on my goals, it's doable. I just got to work a little more aggressively, but it's doable. And helping me with some other stuff and not the traditional things like a wheel and all of these other things. But nonetheless, yeah. What you say now? You can't afford it.
You can't afford it.
And why you say that? Because there's a way to afford it, right?
Yeah, I just think that when people see value, we put our money where we put our value at.
Okay.
You know,
so
when people say I can't afford it, you really can't afford retiring. You live the rest of your life and not being able to retire like you want to. That's what you really can't afford.
Right.
So we look at it from that perspective, because a lot of things what we invest in don't really bring us a real good return anyway. And we just really hunker down and say, hey, really, this is not really going to make things better for me. Maybe I should take what I'm currently doing that's not going to make any sense long term, redirect that money where it'll work for you.
Right.
Once you see the value and see what it could do for your future financially, yeah, it'll be worth it if you say, you're right. I am spending money.
So it's not that we can't afford it, it's where we place the value.
Yes.
And also basically where we place the value.
Yeah.
Where we place the value and that shift.
Yeah.
And redirecting.
Yes.
Redirecting where we can get the most for our money,
right.
Not somebody else reaping the benefit of what we deposit.
Come on, girl.
I'm just say that. I learned that from John, y'all. No lie. I learned that from John. I'm like, well, wait a minute. Hold up. What did you say? And he was like, yeah. Wow. Yeah. Yeah, peace out. LaDosha said, peace out. Great show. Thank you. Okay, so the next one is, what's the best financial advice you've ever received?
Oh, man. Oh, God, it's so much. The best financial advice that I've received is that, golly.
Just pick one thing. I know it's a lot.
Yeah.
Considering 20 years, yeah.
The best financial advice that I've received is learning the power of compound interest.
Okay.
Yeah.
Learning the power of compound interest.
Yeah.
Wow. Okay. So y'all got it. Learning the power of compound interest. And the first question was, what's one money myth you wish people would stop believing? And that's about affordability. It's what you value.
What you value.
Yeah. What you value. What's one thing every entrepreneur should understand about taxes? Just give us one thing. Well, you already said there's a lot of different tax codes.
Right. One thing they need to know is I would recommend is having a team of proactive tax planning on your side.
Okay. Y'all heard that. One thing he wish every entrepreneur should understand about taxes is having a proactive team on your side as it relates to taxes.
Yeah.
Proactive, not reactive.
Yeah.
You send in the numbers and at the end of the year,
right.
Then we figure out what we're going to do and how we're going to do it.
Right.
You need the breaks during the year.
Yeah. Come on now. You're right.
I always say, I ain't going to give them no more, no less. Because
right.
I need my money during the year, not at the end of the year. I need it during the year.
Right.
So the next question is, what's one habit wealthy people consistently practice? You done said a few things, but
Mhm.
give us one thing that they consistently practice besides having a team of people working together. Probably
One thing
it.
particular, one I would say they have I don't know if I said this, but teams, and I don't say teams, excuse me, I say teams, systems. We might have touched on systems. They
Yeah.
have systems and discipline. I would say discipline.
Systems and discipline.
Yes.
So one, he actually gave us two. They kind of go hand in hand.
Yeah.
One habit wealthy people consistently practice is they have systems in place and
And I would say discipline. Discipline is good.
discipline.
Yeah.
They have systems in place, and I'm just going to add their discipline about using those systems
Systems.
that they
Absolutely.
got in place.
Yes.
All right. So what's one book you recommend to entrepreneurs?
Um, One book that I would recommend is Rich Dad Poor Dad.
Hold up. I got it. I'm going to show it to them. For those who don't know, it's the book he said he recommend, Rich Dad Poor Dad. How I found out about this book, a gentleman that I dated when I was in the military told me about this book. But this is the one he's talking about, Rich Dad Poor Dad. This is one he's talking about. So you entrepreneurs, Rich Dad Poor Dad is the book. And it's by Robert T. Kiyosaki.
Yeah. Kiyosaki.
Kiyosaki.
Yep.
Yeah. Rich Dad Poor Dad. Okay. And the last question is, what's one lesson you wish you knew earlier in your career?
Oh wow.
I think you told.
Yeah. One lesson
Yeah, you told me one, but yeah, yeah.
One lesson that I wish I would. Oh yeah, good question. One lesson I wish I would have known early on is, instead of me, grinding and just out there in the field making a bunch of money, if someone would have told me about working capital and getting the credit straight first, so I can have lines of credit at my disposal, so I don't have to burn all my money marketing and things of that nature, that I can OPM other people's money.
Yep. Oh, yeah. Oh.
Business.
Hey, we done had that conversation.
Right.
Yeah.
Definitely working capital,
Right.
lines of credit on the front end before you even start generating income. You want to have that there, because your business is you got to fuel your business. You got to feed your business. And when you feed it, you don't want to use your money for everything. You want to have that source of that line of credit there.
Other people, no, other people, OPM.
Yeah, OPM.
Other people money. Not OPM.
Yeah.
Other people money.
Yeah, absolutely. Yes, ma'am.
All right. So, John, and if our viewers remember only one thing from today's conversation about financial literacy, wealth building, and creating a legacy, what would you want that one thing to be? You've given us a lot of gems tonight. And for those of you who are catching this on the replay, share this podcast. It's a lot of information in here, and I'm hoping that we can get him on maybe once a month or something like that. We can work out something to get him on, because I believe that this information is something to bring forth. As I'm learning, I want to share with you all as well. So hopefully we can squeeze in his schedule to get something like this a little more consistently.
Yes, absolutely.
Yeah, a little more consistently.
Yes,
but
ma'am.
back to the closing question. If our viewers remember only one thing from today's conversation about financial literacy, wealth building, and creating a legacy, what would you want that one thing to be?
Well, good question. I would want that one thing to be, you all, is that it's on you to change your financial trajectory. Yeah, it's not at this stage, Yah-Tay, we haven't been inherit this information, right? But that can change today because you got the information.
Yeah.
You see what I'm saying? So it's
Right.
nobody's holding you back. If you really want change, it's on you now. The
It's on
ball is in
you.
your court.
The change is on you.
Yeah. You know what I'm saying?
Wow.
So our responsibility as professionals who really care is to dig out what people have buried and bring that information to Main Street. So you don't have to be on the opposite side of the truth. You don't have to be on the opposite side of your money. You
Right.
can have the best. You can have the best while you're here, and your family can have the best when you're gone.
When you
So
gone. Wow. Thank you. So, in answering that question, the one thing is it's on you. It's on us. It's on the individual.
yes,
And the information is here. And like I shared with you all earlier, and being transparent, um, I'm still learning things because I've been living life and going from one thing to the next, and really just making it. Um, but be that as it may, and then the background that I come from, and not having my mom early on, losing her, and not having certain informations. I knew some things, but not to this extent. And even the stuff that I shared with him that I knew, it's like, not that it's outdated, it's just I was not informed to this magnitude. And because I wasn't informed to this magnitude, now I gotta work a little harder, pay in a little bit more in order to reap the benefits that I envision based on the plan that we're putting together to reap something in the next 15 years. Because in the next 15 years, 15, 16 years, I'll be 70. So that's not, it's not a short, it's not a long time. It's not, it seems long in thinking about the numbers, but it's not a long time. With that being said, as he said to us, it's on us. Is what we do with the information. And because I'm getting the information and I know that it is of value to me, even at this point in my life, I know that it is valuable to you all, especially those who are in their late teens. I'm talking 18, 19, early 20s. If y'all jump on board, whether you utilize his service or not, again, get the information. The key is having the information and putting the information to use and making your money work for you, and putting things away, not just burial expenses, but insurance that's going to pay not only while you're here, but if something happened to you, and if in the event that you do transition, the legacy and wealth that you leave behind to your loved ones.
yes,
So, like he said, being proactive, having a team of people who are working together, not a tax preparer over here, not a lawyer over in another office, the person who, what you call them, the ones who estate planner over here, but
yeah,
everybody at the same table, and they're talking and communicating with one another,
yes,
where it's in your best interest,
yes,
based on your financial goals and the things that you desire to have down the line, or put in place. So um, it's,
yes.
yeah, yeah. I just want to say thank you, John, for your time. I greatly appreciate it. Thank you to those of you who tuned in. WK Ladosha, um, who was the other gentleman? I forget who it was. My bad. Rico. Thank you for joining. If
Thank
you're catching this on the replay, do like, comment, and share. I'm gonna put John's number back up again, as well as the website. Tonight we've been talking about wealth building, income to look. I can't even get it together. From income to impact, building wealth, protecting assets, and creating a legacy. If you are looking to contact him, please do so at 803. I'm going to always remember this number. 803-727, because that is my hometown area code, 727-6153. And the website is architectfamilyoffice.com. So if you want to get in contact with him, please do. And we have some more comments. Let me get these comments. Oh, Rico, thank you, Wike. Thank you, Rico, for tuning in. And Wike says, thank you, Yah-Tay and John. John, you are wonderful. Thank you for sharing your knowledge with us.
Thank you as well.
Wike, I'm so grateful that he said yes to coming on, because I was like, man, this financial literacy, entrepreneurship, wealth building, asset protection, tax strategies, generational wealth, and legacy, leadership and legacy. He's touched on a little bit of everything. And as you can see, he has what it takes, and he knows some stuff. All right. You got to get in touch with him to get the rest of the stuff. Because it is, when you're dealing with finances and you're talking about things of this magnitude, there's no one size fit all. So some may say, well, he's talking in general terms, and we really didn't get no meat and potatoes. Well, the meat and potatoes come based on your situation. That's why it's called planning and customization. And he talked about being proactive and having a team of individuals together. So, yeah, look him up. I'm currently working with him on some things. I'm grateful that you, like I said, stuck in there with me, because I was looking side-eye like, I don't know. Oh, no. Hey, how you doing?
Yeah. Yes,
but thank you for your patience. And folks that know me know I'm a little, it takes a little minute, you know what I'm saying? But be that as it may, I'm grateful because you're able to help me lay some things out, and providing me with the information and the empowerment, but also the I won't say satisfaction is not the word that I'm looking for, but it's gonna be all right. Yes. You know what I'm saying? You've given me that even in this phase, it's still gonna be all right. It's still gonna be all right, because it's better late than never.
Yes, ma'am.
You know, so with that, I'm grateful. But I do encourage my young folks, get on it, because the sooner, the better, the more rewards you'll reap from succession planning, having things in place. And you'll work, but you won't have to work as hard. You won't have to contribute as much, you know, unlike me. And I'm just being transparent. So, John, I want to say thank you.
Thank you.
Financial literacy matters. Protect what you build. He talked about that. Think beyond income. He talked about income, but he also talked about the impact of building wealth and protecting your assets and creating a legacy. The impact of those things, not just your income. You know, that's only part of the equation.
Yes.
He mentioned that before. If you didn't catch it, got to go back and rewind and listen to it. And also creating a legacy with purpose. This isn't just about burial expenses. This is about creating wealth.
Right.
creating income for yourself in the event that something happens.
Right.
You know, if you couldn't work, or and I even asked him, I said, well, what happens if my family don't want to help me out and I got to go into a nursing facility? How is this going to help me with that? Oh, and he was like, this is what that looks like. This is what you'll get, you know, if that happened. And if something happened to you, God forbid, this is what your loved ones would get. And I'm
Yeah.
like, oh, okay.
Yeah.
Oh, okay. So it's giving me purpose, you know, not that I didn't have purpose, but it's
Security.
yeah, that security is
Peace.
I
Calmness. Like,
it's not too late.
right.
That's the biggest thing that I can see with the numbers that you showed me. I'm like, okay, I can do this. I can work this for the next, you know, X amount of years to get these things, you know, done. Because I don't plan on retiring soon. You
Right.
know, there's still some work,
Yes, ma'am.
still
Yes.
some things that I
Yes.
desire to do, especially now that, you know, some doors are opening up for me. And I'm like, okay, God, ooh, all right then, all right then. But in saying that, John, thank you for bringing this information. Thank you for sharing. And it is my hope that we can do something to not only bring more exposure to what you're doing, but also bring more financial information. Be a place where we can get some financial literacy. You know, and
Yes, ma'am.
once again, he already recommended the book. I'm sure many of you may know about this book, Rich Dad, Poor Dad. I have it here in hard form, but I think I'm gonna get it on audiobook because I tend to have books and then get it audio so I can hear and, you know, read as I go along, especially when I'm traveling. I like to do a lot of books such as that. But I want to thank you. I know I done hogged up most of your time,
That's
but thank
okay.
you so much. Is there anything else you want to share with the audience as I prepare to close out?
No, not at the time. I just appreciate everybody for tuning in, and call me. You can, reach out to me. I'll be more than happy to answer any questions. I'm here. I'm local, right here in Columbia, South Carolina. I'm a local. We basically in each other's backyard, and so
Yeah,
I
yeah.
don't mind traveling, sitting down with anyone. I'm very in person with folk, man, kneecap to kneecap, virtual, whichever you're comfortable with. But I want to get to know you. I would love to see if there's anything that I can do to help solve any financial concerns, and just connect with you. Whichever way that looks like. We don't mind. Serving families. That's what we do. That's our priorities over here. So we thank you, and we Miss Yah-Tay, thank you so much
No,
for
thank
your
you for your
time and
time.
for letting
I
me be a part of this experience. I appreciate you so, so much. Thank you.
Thank you. Thank you. Thank you. Thank you, John. I appreciate you as well. May this information bless the hearers. Y'all do share, comment, leave any comments that you have. Reach out to him. I've shared his social media with you all as well. You can reach him on Facebook and Instagram at Architect Family Office. We're going to get some more information out there. For him. He's getting the hang of this social media stuff.
Yeah.
But nonetheless, his info is there. His contact info is here. If you have any questions, please do reach out to him. He's very personable. If he can't get to you right away, he'll get to you.
Yes.
Because sometimes I hit him with a question. I'm driving. That could pop back.
Yeah.
I'm driving. The message come back. I'm driving. Okay, but he's there. He's there. So once again, the takeaways: financial literacy matters. You all protect what you build. If you're building something, protect it. think beyond income, because it's more than just income. You got to think about the wealth building and legacy creation, and also the purpose of creating that legacy. Create a legacy with purpose. We got one question that just a comment just popped up. We can't say thank you. Have a good night. I'll be getting a hold of you, John. We can't say we'll be getting a hold of you.
Yes,
so
sir.
in closing, I want to say success isn't just what you earn. It's about what you build, protect, and pass on. Once again, success isn't just about what you earn. He said it, y'all. He said it. It's about what you build, what you protect, and what you pass on. I'm still building. I'm protecting, trying to protect a little bit I do got.
Yes,
Like
ma'am.
I said, do got.
Yes,
And
ma'am.
then pass on. So I'm looking at, putting some things in place to be able to pass some things on, and not just these videos from YouTube.
Yes, ma'am. Yes, ma'am.
Even though that's valuable information, because they'll be able to go back and play it. And for my family and the nieces, nephews, great nieces, great nephews, great great nieces, great great nephews, who I might not get to see, y'all will be able to hear my voice and see me via these lives.
Yes,
But
ma'am.
this is some evergreen information. Like I said, connect with him. Financial literacy matters. And the information that he has is more than just burial expense. Okay.
Ma'am.
That's all I'm going to say. Y'all check him out. So teach what you know, share what you have, and give what you can. This has been another episode of Female Barber Talk with Yah-Tay. And we have completed episode 78, from income to impact, building wealth, protecting assets, and creating legacy with John Bowers. And happy Father's Day to all the fathers out there. Thank you, John, once again.
Thank
And
you.
we'll chat, because I got to get this information to you as well.
Yes, ma'am, for
Thank
sure.
you so much.
Appreciate
Have
you.
a good one.
Bless
Take
y'all.
care.
Yeah.
I am real roots pride. I am real roots love. I am real roots naturals, naturals. I am real roots pride. I am real roots love. I am real roots naturals, naturals. I am real roots pride. I am real roots love. I am real roots naturals, naturals.